Good morning. Happy Friday. Let's get some charts up here. Of course, everybody knows the markets are down. Lots of red. Actually, looking at what's down at the bottom here as to what's trading, doesn't look so bad. I don't see things that are down like getting smashed big time. Probably something out there. And the video is still up on the day. Um, anyway, markets are lower here, and so I titled the YouTube thing, those S&P options are, the puts are just priced for a disaster here. It's the uncertainty as to, what's going on, with the Fed. It started, a couple of days ago and all that. And so they're just pricing them in for I guess the possibility. But as I was looking at them, I mean, even going all the way down to 40, they were 50 cents by 70, which, that far away. I mean, even a little below that. So you go to what is, I guess, what would be reasonable. You think even going down to 4,100 would be big. So this is a big option, open interest down there at 410 on the spiders. You can see they're just bouncing off of 417 in the area of this reversal down here. And so looking at SPX, these are big option strikes. And then there's the void down here. So, I mean, going all the way down here, I mean, look, we all know anything's possible, but what's probable? And to come all the way down to the here, it's not even through the 50 MA. And it's kind of ridiculous, right? I think so, but hey, it is what it is. Those prices down there are and pricing in a flash crash. So let's see what happens in the first few minutes. And up above, I didn't even look. I didn't even imagine that there'd be premium up there, but let's take a look. 50. Wow. 42. Have to go to like 4260. 260. So it'd have to make new high on the day. So let's look at where the S&Ps are. 4175. It's kind of a little bounce off of that double bottom there. I don't know what's going on here with the quote. There we go. So they haven't even hit the 50 MA yet. And there's a pivot low. So we look for, lines where of defense. And so, as you can see, the range here is already relatively large, not as big as, a couple of days ago, but, relatively large range in comparison to what's to the left here, which, okay, on the normal days, the way we look at that is to say, well, if it's already at the largest ranges, this has, there's some bigger ones, hasn't exceeded it, how much bigger could it get on average? So, as we look at that kind of a bar, it's not even half the size of that yet. So that certainly could be a possibility. And I mean, so putting it below that, and we think about there's premium down here. Seems like a no-brainer. Again, let's see what happens in the first few minutes. But 4160. But McGraw, look at, there's premium, unless my quotes are off. There was enough premium down at 4040. to do something, right? So these option market makers are obviously nervous and thinking there could be a crash. So that would be a monster day, and it's just, I don't know. We all think like that couldn't happen, and we know anything crazy could happen, but just seems inconceivable. Yes, yeah. So lining up, he said 4160. Right. Lines up 50 MA. That's what we found, McGraw, is like before we started looking at this more closely, when you brought it to my attention, if you remember, I said to you, I said, wherever you're getting these numbers, these people must be looking at a chart and looking to the left. And as I delved further into it and saw what they were actually doing, I was like, these guys can't read charts. I mean, they can, but they're not looking at it from the point of view as we do, and with pivots and different levels. And it's interesting how these option inflection points actually line up with actual support and resistance. Anyway, so there's a lot of different ways of looking at the markets, stocks. We keep it simple. Is it going up, down, or sideways? Look to the left where there's support and resistance. And so whether you're looking at, things like, the bell curve thing, market profile or volume profiles, and now even all of these big open interests with market makers are well, they're just making markets. Institutions are trading around these points with big option positions, and they line up with what's to the left. Right? All right. I don't know why you say that. Stravros saying I must have a war trading room. I don't know. It's just a pretty simple room here. I don't know why you're saying that. Anyway, okay. So look, closing below this pivot low breaks the uptrend on the S&Ps. We'll see if that happens. Looking at the spiders, just for reference point, know where your 50 MA is, and here's the pivot low. So, we got our reference points. So as this comes down, it's at 417. That 50 MA is at about 417. It's a defense line the institutions are going to use. So knowing where that's at, we've already got the industrials. They broke down through the 50 MA, and now they're down at this pivot here. Looking at, the futures are right down here at these pivots. The diamonds, you see, are right in that area. They bounced here a little bit. So this kind of a pattern historically will break through these pivots before they bounce back up. That's the MTS concept of a greater than 100% retracement, to be looking for a slowing in momentum after bars have been moving in one direction and they break through the prior support level. Look for a slowing in momentum. And if you notice, one of the things that we don't do, or if things are moving fast, sometimes you can't avoid it. But one of the things that we do, by putting stops under pivot lows like this, when we initiate a trade, if we see a pattern that's falling in this way, and majority of the time we're going to kill that trade. Well, this is too far away to put a stop there. But anyway, even as intraday traders, when you see prices falling, let's take it from an intraday trading point of view, like something like this, and it's going down for like 45, 50 minutes, and it's going toward your stop, pull the stop, right? You say, Greg, that's scary. Pull the stop. Yeah, pull the stop. And after it breaks there, wait for the stabilization. And majority of the time, it's going to pop back up and you'll get out at a better level, right? It's just something that historically happens over and over and over and over again. There are stops down there and it hits them and it's like a flush. And, you just get a slowing momentum or a bounce from there, right? You talk far away from when you have to turn my head. So in TC 2000, a lot of times they have option quotes, but they're not updating here. And over in Investors Business Daily, the trading platform, those option quotes are updating. So I had to turn my head. That's why the mic went down when I did that. So it was just a matter of a head turn. It wasn't walking across a big room or anything like that. All right. Okay. So I looked at YM, the NQs, right? They're holding up the best. They've been doing the best. You can see the big run up yesterday was just relentless buying. And now those buyers have to be a little nervous. They're not running. Um, they're not running away. It's a big bar. So our factory work, this is a void, right? Weakest link because there's no support underneath it. And so this could fall all the way back down if this does not get under control. Looking to the left, you see that pivot right there? You see how simple it is? Just look to the left. No fib lines, no Ichikumi clouds, no fib extensions, no brain damage, right? So topping pattern, big drop, it's stabilizing. Most times this isn't going to hold, right? Especially if things continue to get ugly. So breaking below here opens up the door to, going all the way back down into that green bar. It'll be interesting to see actually what happens today because, they were falling all over themselves yesterday to buy. There was no pullbacks. Look down the fish straight up. And there's no pivots. It's just, very, very strong demand. And so we want to see this stay up here to keep this chart intact, so to speak. We'll see how that plays out today. So there was the big bar. There's, the Qs. And so we're down at down to 343. 343. So not too bad, right? Not too bad considering, right? Pretty normal for a negative open. And so you got a big level here. You got a big level there. So, your levels, you set your alerts and see what happens as we look at different markets and stocks. All right. Russell, that's the continue. That's all the way back down to the pivot low. Let's look at the current contract. Since it's just beginning to trade, I'll kind of switch back and forth and then go back to the continuous one. But getting a big red bar there on the weekly chart, pretty deep retracement. There were buyers again, so, negative surprise, to those that held overnight. Let me look at WM. So 224.50. So that's a big level there. And then there's pretty much nothing between here and here. So we see voids, we see some stabilization, some bounces, and voodoo lines. Somebody said that before, John. I was like, it's just, yeah, I can imagine somebody created something called voodoo lines. Why not? Why not? There's a sucker born every day, right? Isn't that what P.D. Barnum said? Okay. So red all over the place. Interestingly here, we saw this yesterday, and I don't know what's up with that, with the 10-year going like that. And well, that's the 30-year. And the 10-year looks like this. I had changed it, but one of the things that I saw they were talking on CNBC this morning for a little while, while pulling back a little bit. It's been really strong. And we've talked here, over the years about yield curves, and I spoke about why financials were going down, tightening yield curve. But I told you to watch this quite a while ago. This starts going up. Right? So everybody's now the Fed talking, but that we have tools, right? Meaning different intermarket analysis instruments that'll tell us what's happening. And said, if this starts moving up, that's not going to be a good sign for the markets, short term. And, we got the 5-year, so, popping up here. And if we look at here, because it was kind of not really relevant to be looking at something like this until now, and you see these different yield curves, and you see these drops that are going on here this morning, where these things are tightening up between long and short-term interest rates so rapidly. I mean, that could be why these options are being priced as they are. There's the uncertainty as to how much this selling might really start to pick up if we don't see some stabilization in the first half hour or so. So keep an eye on that. Our internals back at the beginning of June said, warning, Will Robinson. Now we're seeing how it's playing out. I'll go back to this page. Well, VIX, VIX is up, 20 and a half. So really not a big deal yet. It's got plenty of room to go up, in this area here. So look, we'll see how things unfold here this morning. Obviously, it looks a little dire, with those option prices, where they're at. The NASDAQ doesn't look so bad. And, the Dow, has already had its little mini crashing thing going on there. So 334, down into this significant support area there. So, we'll see what happens, but maybe it's just going to be a half hour frenzy of kicking and screaming with this open, and then we see how things stabilize. So we'll see. Well, yours, Dan. Let's just, people are talking about Bitcoin and what's that doing there. And so when it's dropped like this, we said, a typical pattern would be a retest pattern. And we got exactly that. It's taken out this pivot high. And now the bottoming process in this area has begun. You see the weekly chart with the bottoming tail bar. So I don't actually think it's out of the woods yet. After this 2-bar drop like that, it's still just hovering down here. So it's got more work to do. But we'll keep an eye on this, because we like trading the stocks related to that and some of the ETFs related to it. Can you share one more time, one ticker we need to watch for regarding rates? Oh, sure. These right here are all yields. This is down here. IRX is the 3-month. FVX is the 5-year. TNX is the 10-year. And so they're very far away from each other at this time. But historically, the real worry comes when you see these coming down towards 0 and under 0.5. So, back here where the 30 versus the 3-month came towards 0 was right, but we were getting warning. What's going on here? I don't know. The market's going up, but this is telling us something's going on here. And then the Corona crash came. So these are our tools that tell us, we can't know everything that's happening out there in the world or in the markets, but we have tools that guide us. And this is a long-term tool that guides us. These are short-term tools that guide us. So we have intermarket relationships and market internals, and of course, just plain old price charts that we look at. And the combination of that is what I call a 3-legged stool. Now, if you're an intraday scalper, not going to make you much difference. We look at an NYSE tick indicator and intraday put call ratios. But if you're a swing trader, especially an investor, these are, priceless to have. Well, yours, Dan. Sorry, I took too much of your time.
Oh, no worries at all. That's all good stuff. Yeah, that Bitcoin you showed actually looks like a possible inverse head and shoulders if it can keep chugging along sideways and making the right shoulder. But what's interesting is we were looking at BITW yesterday, and look at this nasty. Look, this is, well, this is 10 currencies, obviously, so I'm comparing apples and oranges, but you can see Bitcoin holding and the 10 of them here, that is a nasty downtrend right there. ETHE was breaking down. Block is one of the things. All right, so this one's holding a whole lot better than those 10 currencies. But anyway, we have fairly light inventory. We've picked up a couple put spreads into the close on strong NASDAQ stocks. And, I think it's the TBT crashing yesterday, interest rates, which gave the Qs were just on total crazy strength. And I was hoping to get a inside bar 123, but just visually here, based on the gap, it looks like it's going to be a deeper than 40%. I'm just eyeballing it here. But yeah, Q's holding up the best. Um, we are asking about ABTR. ABTR. It's up 2 bars, but it was very bullish, wide range breakout consolidation. Today's Friday. Wednesday was the ideal entry. I'm not going to be in a rush to get into any swing longs here today. I do like the idea of trying to do a zero put spread. So now this green bar on the spiders pre-market, that little bounce there, is now negated. So that's telling me it's still very heavy, very, very heavy here. I would prefer to get a nasty 30-minute sell-off or even 60 minutes and then get our intraday reversal to sell those put spreads. It's quadruple witching, which means the monthly index options, it actually, they expired yesterday, but I guess they're AM settlements. So a lot of that expired pre-market, which is part of the jockeying pre-market when things are wacky. But then we have quarterly and weekly expiration at the close today. So expect fireworks into the close also. Swabi here, bottom right, earnings, beautiful gap here. It's holding like a tank. McGraw, let's put spread in addition to 30-minute high, possible long. DJ was asking about ORPH. No, what were you asking about? Yeah, that's what you were asking about. That's a nasty gap down to $8. Oh, I don't like that at all. Put it in a 5-minute chart if you think if you might set up as a day trade. BB. I don't like all these overlapping bars to the left here. And so Greg, I started making our slides for next Wednesday MT Live. We're going to be talking about quality. What is a quality pattern? And what I'm going to do is show quality ones, and then I'm going to pick, right after that, I'm going to pick some examples to say, all right, this is a buy setup, so tell me why it's not quality. And I think that'll be a really good exercise. So this actually is a very, very, very sloppy buy setup. But the quality is horrible because, it's not a controlled fluid pullback to support and reversal. This is a breakdown and stabilization. Now you might get a day trade out of it, but just compare BB to this Swabi that I just showed you. This one's superior. It came down more fluid. I have a bottoming tail at the 50 on support. I got a bullish gap, bullish pre-market. So you see the difference? in those two right there. So actually, that BB might be a good one to put in my slides to talk about. All right, Lynn, we were watching yesterday, had earnings. McGraw, I forgot to look for a put spread yesterday. Did you? It's definitely not a directional, but gapping up here. Let's check maybe a put spread for next week. Lennar, L-E-N, Jacopo, ADVM. It's a bottoming pattern. It's opening flat, so I don't touch these things unless I get what we call a something something bar. What's a something something bar? Give me something. A gap reversal, a big old bottoming tail, a wide range igniting, a gap breakout. And as of right now, I got nothing. I don't have any, I got nothing there. So the coin toss. CSX down alarm. We're short this. Transports were weak. IYT, we're still short a half lot of transports. Adobe had earnings 569. Yeah, you better, wait for your setup. It's incredibly bullish stock, one of the strongest out there. Look at this igniting bar. I'm talking about there should be a strong stock club. And look at NVIDIA. NVIDIA would be the president of the club. Just amazing strength. And look at it pre-market. Look at that 15-minute chart. So Paul Kuzma, personally, I'd rather trade NVIDIA. Just because Adobe, it's a big gap. It's earnings. You're going to have more uncertainty with the whip and news and this and that. So trading earnings stocks just inherently are going to be more volatile. This thing looks beautiful. T, yeah, T looks lower. Sure. Yeah, I like it. I like it, Alex. Had a weak close on horizontal support, but after a small little 180 reversal, and it's a bearish pre-market. Yeah, that looks good. On FedEx, the FedEx day trade could be lower, but even shorts aren't going to be that easy right now until we see when you have a big gap. This, I want to see what reaction we're going to get. So I highly recommend that we all chill here for a minimum 5 minutes, which is the general rule anyway. All right, IYT down alarm, very nice. We're short a half lot on that. I'm going to go ahead and tighten stop over this little 15-minute pivot into the close. 259.83. Jim Bullard, one of the Fed guys, non-voting members. I respect the heck out of him. Not only is he a smart man, but it's like he didn't. The Powell to me is too damn political.